quick to market rosé, Sauvignon Blanc, something like that, that's not as valuable, you get indemnified for that. My philosophy with wine coverage is kind of similar that if you had gold or something else. You know, if you have $20 million worth of wine that's in a wildfire location, that needs to be insured. To me, it's the same as if you had $20 million worth of flammable gold in a wildfire area and didn't have it insured. 20 million is 20 million regardless of what it is. So it's trying to make sure people understand their risk, and we want to get the proper valuation language on there, because there's a lot of policies that will have cost of goods language on there, and we have a huge gap between what you paid for the fruit or what the farming costs were, and the business income exposure there of what the wine would have sold for. So we have crop insurance, which will cover the cost of the fruit, but again, the loss of business income can be substantial. And a typical package policy doesn't have contingent business income coverage for crops. It's specifically excluded. So you can have it for some other items, but for crops, because of the volatility of the season, there's no carrier on the market right now that will raise their hand for that. So it's trying to make sure that people have adequate coverage, they have the correct valuation language. I've seen very well-known wineries that have seemingly robust policies that have actual cash value language on their stock throughput policies that are six-figure premiums. So what we do in that scenario is we try to go in, manuscript an endorsement that reflects market value for that wine. So if it's your Sauvignon Blanc, you would get quick to market rosé, Sauvignon Blanc, something like that, that's not as valuable, you get indemnified for that. If it's your reserve Cabernet or Pinot Noir that's 2-3 years in barrel, very high value, that the policy would pay out for that.